Let's talk about the markets in 2 minutes. We've had earnings plenty out from Europe this morning. Putting those to one side, though, on the macro level, a couple of things to mention. The yen very much on the move, up 0.6%. It went over 150, I think, perhaps whilst I was asleep. But the BOJ board member talking about things that might take us a little bit closer to the BOJ actually moving. What did you make of the comments?
Yeah, we had a real dip today in dollar yen. Dollar yen's been kind of stuck above that 150 level for some time now recently, trading kind of around that year-to-date high. And people are wondering when it could go higher. Suddenly the game changer this morning, or game changer might be a bit of a stretch, but the move this morning was triggered by BOJ member Takata, who was perceived as being quite dovish, basically implying that they're ready to hike very, very soon. And this came in the context that earlier in the morning we'd had some comments that were perceived as being quite dovish, and we also had terrible industrial production, just absolutely terrible industrial production. So if we're getting a dovish BOJ member saying they're ready to move on rates, even with that terrible data, that kind of made the market realize, hey, wait, BOJ is really desperate to get out of negative yields. March is now very much live again for the BOJ, and I actually think they will probably hike. This is not the start of a sustained hiking move, though. It's probably one and done, or maybe two and done this year.
And on the PCE numbers, the deflator number we get out of the US a little bit later on, what are you expecting there?
So I think it's likely, given the inflation prints recently, we get a high number. But I do think the market still wants to buy bonds. We very much bought into the narrative that rates pricing has now aligned with the Fed's last dot plot, and therefore people are now seeing this as the latest excuse to buy bonds. So even if we get a slightly hot print today, yields back up a bit, I think people will very, very quickly buy bonds into that jump up in yields. However, the backdrop is that for the next couple of months, until the data returns materially, I think yields are inexorably going a little bit higher.